Hello, everyone. Welcome to the market update for Tuesday, November the 16th. A little bit of a market rally today. Today's rally kind of caught me a little bit by surprise. I'll show you when we look at the chart here. A lot of the price action over the last few days was suggesting that we might have another move lower, maybe test the breakout area. And, that still could be possible. In fact, that's what I was hoping that would happen, because it would alleviate a little bit of the near-term overbought condition and make me a little bit more confident buying into the trend. But the market doesn't always do what we want it to do. So anyway, let's take a look at the direction alerts. One thing we can see right here is that momentum is slipping a little bit. Brett has kind of caught up to momentum and past momentum, which again is it's just telling us that and that could change very quickly too. If this is a breakout move and the market is going to start to rally, we would definitely see momentum pick up. The fact that Brett just picked up quite a bit is a good sign. As far as participation, there's more stocks participating in the rally. So you can see here momentum is lagging just a little bit here. It's still in the buy range, but not near the extreme range there. And all this is pointing to the fact that we could still move higher. I've talked about this a number of updates now in a row, that there's still room for this rally to keep going. Here's Brett. You can see Brett has picked up a little bit. We're inching a little bit closer to that extreme range, not quite there yet. Now, when we do move into this extreme range, that's when we do have to start paying attention. Doesn't mean that you'll get a pullback immediately. In fact, you could get all the way to the right side of the extreme range. But we do want to start looking for any sort of bearish reversal, price action that takes place that could indicate a larger correction. And the fact that we're moving into one of the more bullish times of the year, the week of Thanksgiving is really a bullish time of the year. And almost every year you tend to get a little bit of a rally that week. And that's why I thought maybe we get a little bit of a pullback this week and then head into next week where we rally. But it could be that we just start taking off. Sentiment is moving into that extreme range. It's already been high. It's been elevated the whole time. The trading crowd is very bullish on the market, and again, every time you pull back and you take off again, it creates that confidence that you buy every dip. The market is going to keep going higher. It's bulletproof, especially when it kind of shakes off bad news, which it has been doing lately. It kind of all builds towards that sentiment that creates that market top where nobody believes that a big correction will take place. And then when it happens, it creates that panic selling that fuels that sell-off. So we'll be watching for that. Again, we're still probably a little ways away from that. We look at the buy-sell ratios. Again, we were a little bit wide. We've come together a little bit here, but still, you can get even more extreme as we've seen in the past. So nothing indicating any sort of extreme level there. Sentiment is backed off a little bit. It's not near the red line there, so we still have some room to run as far as that's concerned. Let's take a look at the individual charts, and I can show you what I was talking about earlier. So, we had that initial sell-off right here. And yes, you can have a pullback and then have it go higher again. We've seen that happen a few times where it's just had a one drop sell-off. In fact, we've had a lot of them lately. But especially yesterday, we had that bearish reversal candle yesterday. So it led me to believe that that we were maybe in a wave B right here, and we're going to get wave C coming back down, maybe come down to this breakout area. Now the breakout area is down a little bit further on the SPY, not down as much on the others, which I'll show you here in just a second. But I thought maybe we'd get a little bit of a further drop. We've shaken that off. Now it's still possible we could still get that drop, but we're right at the highs of the day. Volume is a little bit light today, so that could be an indication that maybe this is just still part of that sucker's rally, so to speak. It's still possible that could be wave B, and that we get wave C coming down. But if we start to break out, you have to just assume that was the pullback, and we're off and running again. But like I said, I was hoping for a little bit of that pullback to alleviate a little bit more of the overbought condition, and get a little bit more confidence when it started to rally again to kind of jump back in. Like I said, the market doesn't ever do what I want it to do. So let's look at the other indexes. You can see what I was talking about here. So here's the breakout area on the Dow. So again, this is looking like wave A, wave B. Again, bearish reversal candle yesterday. We've gone higher today, but you can see that the Dow is not near its all-time high. Well, it's near it, but it's not with today's move. Like the S&P is right there. This could still be wave B, and then you get wave C. Now, again, what's interesting here is if it did come down to that breakout area, you'd have wave C would be about the same length as wave A, which is what you'd be looking for, that relationship, that proportion. Very often an ABC pattern will complete when wave C is about the same length as wave A. But and I'll still be watching for that. If we get any sort of bearish reversal, or if we start fading off the highs of today going into the close for some reason, that could still be in play. You see the Qs, kind of the same thing. Here's the breakout area. If that's wave A, this is wave B, and you get wave C. Again, you've got that wave C about the same length as wave A if that were to happen. And even on the Russell, kind of the same thing as well. There's the breakout area right here on the Russell. That could be wave A, wave B, wave C. Now, again, the Russell is still lagging. It's not above yesterday's high, so you have that bearish reversal day. So again, there is some subtle weakness in the market with the rally. It could be that today's a little bit of a false move. Now, again, that could be different by Thursday when we have the next update. We'll probably have a better idea of what's going on, particularly if the S&P breaks out. But that's something just to keep an eye on. Again, you can see with the Russell, it's not near its all-time high. The Qs a little bit closer, but still not right at the all-time high. Dow, same thing. It's the S&P that's right at it. And so we'll watch for that at the close, see if that fades a little bit or if it breaks out. Now, typically, you're going to get the leadership from the Russell, meaning the Russell should have been breaking out ahead of the other indexes. That's usually a stronger bullish sign, but the Russell's been lagging for several months, so I don't know that I would expect it to be breaking out first. Well, it's obviously the furthest away from breaking out, so, but we'll keep an eye on that, see how that looks. Bonds made a big dip over the last few days. Last week we were talking about the higher highs, higher lows in the bond trend here, and we were seeing if that, are we going to break out to the new all-time high, or is that are we going to reverse that? Yesterday we did go to a lower low, so there is a behavior here of a trend reversal into a downtrend in bonds. Now, I talked about this either last week or the week before about, in order to really fuel a rally in the market, you'd want to see bonds kind of pull back or come down, meaning that money was coming out of bonds and that money could go into the market. In order to drive the market higher, there has to be some sideline money that's going in. At some point, if everyone that wants to be in the market is in the market, you're at the top because there's no new money to fuel any moves higher. So that was kind of my belief over the last few weeks, was that as bonds were rallying right here, that there's money going into bonds, which means it's not in the market. That's going to help stall the market rally a little bit. Now that we're seeing bonds drop and we're seeing the S&P possibly close to breaking out to a new all-time high, maybe we start to see that the side money coming out of bonds into the market. We'll see if that continues. But that is something to pay attention to. You've got an impulsive up right here, impulsive down that goes to a lower low. Again, these are just these subtle little clues of reading the trends, reading the price action. That's an indication of a potential trend reversal. And so I would now start to look at the bonds maybe starting to trend downward. We'll see if that continues, obviously, over the next week or so. Now, obviously with the fact that we've dropped pretty dramatically for the last few days, we could get a little bit of a bounce. And that would be good, because if you get a bounce and then it drops again, now you're confirming that downtrend. You've already got your lower low. You get a lower high if it bounces and then rolls over, and now it's behaving or acting like a downtrend. A little bit of that confirmation as it kind of moves there. So we'll keep an eye on that, see how that continues to trend. Gold has broken out. I think I talked about this last Thursday. Last Tuesday, it was real close. It was bumped up against here. But remember, we've been watching this range. It's been in the sideways range. It's broken out above it. Now gold's down a little bit today. Maybe it's going to come down and retest that breakout. Another thing to keep an eye on, which we'll look at here in a second, is the dollar's been rising too. Now, typically, commodities and the dollar tends to move in the opposite direction. And so, with the dollar rising, we'll have to see if that continues. Or which one ends up changing direction first. Does the dollar start pulling back with commodities maybe going higher, but that tends to, again, you don't always have that opposite relationship, but when they're moving in the same direction, you do want to pay attention. They usually don't move in the same direction. So we'll watch for that to see if we see it breaking out, because right now gold, having just broken out, looks bullish. We'll take a look at the oil chart. The oil chart looks like it's in a kind of correction right now, but it still looks like it's in an uptrend. So something's got to give at some point. We'll see if commodities keep going higher, if the dollar starts pulling back. If the market's going to rally, you probably need the dollar to pull back a little bit, because it's been moving higher. Typically, a higher dollar tends to stall some of the rally in some of the stocks. You usually like to see a little bit of a weaker dollar. At least that's been the trend for the last few years. But again, the dollar can get too weak as well. It has to be a little bit of a balance there. But here's the oil chart. You can see it looks like we're still coming out of a correction right here. Nice uptrend through here. We had a larger correction back in here. I don't anticipate that this will get larger, but it's possible if this is wave A, wave B, typically wave C will come down a little bit further. So it's still maybe possible that it pulls back a little bit further. Again, a lot of that might have to do with the dollar movement. Let's take a look at the dollar chart. You can see we're at an extreme overbought, far right side, an extreme range. We've gone kind of straight up through here. So we'll see if the dollar starts to correct a little bit, but it's in an uptrend. I mean, I don't see any sign of a trend reversal yet, except for the fact that it's extremely overbought, but it can stay extremely overbought for a little while, and it could even just pull back, give us a higher low again, alleviate some of that overbought condition, and then continue to move higher. So clearly the dollar is in an uptrend. I don't see any sort of reversal there, but we'll keep an eye on that. We'll see if any of that changes. The VIX has been moving lower with the market going higher. We'll see if it starts to, again, one thing I'll be looking for is if you see the SV breakout, see the VIX, break to new lows. That could actually be a little bit more of a bearish signal, that the market is getting a little bit too overconfident. Remember, when it pulled back a little bit, we saw the VIX move up and the market move up. If we start seeing the market move up and the VIX just collapsing, that just tells you that the professional traders are not even worried about hedging. They're not buying protection. And then that's what can fuel that panic selling when a correction actually starts to take place. So the VIX is tough to read. There's not a real black and white way to read the VIX. That's why it's really important you understand that what the VIX is telling you is it's telling you kind of the mindset of the professional traders, those institutional investors. Are they concerned? Are they confident? Are they complacent? We're just trying to kind of read how they're reacting, and then how they're reacting could be a signal of bullishness for the market, or it could be a signal of bearishness. And like I said, when you're breaking out to new all-time highs and the professional traders aren't showing any sort of concern of a pullback, and the market's getting stretched and overbought, and they're confident it's going to keep going higher, that's a little bit of a warning sign. And again, we're not there yet, but that's something I'm keeping an eye on, because you start to hit those extremes on the direction alerts, and you start seeing those extremes on you start seeing the VIX drop, and it starts, all those little clues start to paint the picture of a market top, and that's when you really want to start paying attention and be ready. Let me go back to another thing I'm keeping an eye on is the chip stocks. This is another one again yesterday. So yesterday again we had the market giving a bearish reversal candle, and then just about everything. The chip stocks had a little bearish reversal candle. It looked like that could be wave A, wave B. We're going to get wave C coming down. A lot of those chip stocks are really stretched. People are pouring into NVIDIA, AMD. Valuations are really getting stretched there. Now again, they can these things can stay overbought and extreme for a while, but that's something to keep an eye on. We've got Rivian, that electric vehicle stock that just keeps going higher after its IPO. It's got a crazy value. It's valued. It's got a market cap now bigger than GM and Ford. I mean, that's insane. They're not even selling anything yet. They're not. This is starting to really get a feel like the internet bubble of 2000. It was the same thing. In fact, it was worse in 2000. But back in 2000, it was the dot-com rush, and people were forming companies just based on a business plan, an idea, they were selling stock and people were buying the stock. Anything .com they were buying, and they weren't selling anything yet or doing anything yet, but they're bringing all this money, and obviously that couldn't last. It collapsed, and we could be in the early stages, but a lot of, especially when it comes to electric vehicles, it's getting to feel like that internet bubble where anything electric vehicle is going up, and obviously that can't last, especially if they're not producing anything, and especially if their market cap is bigger than the established companies that have been around forever. It's at some point you got to say this is crazy. Dow Transportation stocks, same thing, had a bearish reversal candle yesterday. Looked like maybe that's wave A, wave B, wave C. Again, by Thursday we should have a little bit better idea of because either we're going to shake this off and just go higher, or we are going to drop a little bit lower. The fact that you got a compact candle today on the transports, it's not necessarily looking overly bullish. In fact, that's looking like an indecision day today. And another thing I'd point to, the volume is very light today too. So we'll see. See how things kind of play out the next couple of days. But I don't have if you were to tell me what my confidence level is of a rally or a pullback this week, it could go either way still right now, the way I'm looking at things. So especially with yesterday's price action. So I'm going to be probably sitting tight a little bit. So as it comes to portfolio today, I don't have any plans to do anything or add anything. I want to kind of see, how things kind of play out a little bit. Might have a little bit more activity on Thursday, depending on how things go in the next couple of days. Bitcoin's been pulling back a little bit. See, reached a new all-time high right here. Now technically that's probably there's the higher low, higher high, so it hasn't broken to a lower low yet, but this is looking a little bit more impulsive, so we'll keep an eye on that. If it breaks below here, it could be in a little bit of a trend reversal, maybe a little bit of a correction, larger correction, maybe an ABC correction. All right, taking a look at the portfolio. We're still down about 4,000. You can see I've got a lot of cash still available, even with adding a few positions last week, a couple positions. Let me take a look at the individual charts here. SBOW, again, it seems to just be in a correction right here. We got kind of close to our stop yesterday. It went to a sell signal. That's back to a hold today. See if this starts taking off. Remember, the oil chart looked like it was in a correction as well. If it starts to take off, we should see oil stocks take off. We have lightened up quite a bit as far as the oil exposure. Got stopped out of a few trades last week. Let's move on to ASAN. ASAN looked like it was starting to break out, and that's kind of pulled back. It's still kind of in this little triangle formation here. But again, I see no reason to bail on this one, even though it's gone back to a hold signal today. Very compact trading day, indecision day right there. And you'll see on all these are real close to breaking out. LOB, E. You've got, again, a triangle formation. Trying to break out right there. GameStop looks like it's kind of put in a higher low right there. Although it's not really taken off. And that worries me, because whenever it's sluggish, coming out of a pullback. You have to wonder if that's maybe wave A, and this is kind of that sucker's rally for wave B, and then you get wave C. Hopefully this can have a nice update, start to take off again. But I like the overall look of the chart. Looks like it's starting to move back up again. We need those Reddit traders to start buying GameStop again and drive the price up again. SENS, kind of the same thing. I like this kind of bull look to the pattern. That's why I got in this last week. Again, hasn't taken off yet, but if it can move back up here and break out, this thing should be off and running. So we don't have that many positions. I was going through the watch list and I booted out a lot of stocks. I kind of got rid of all the shipping companies I was watching. They just been kind of. I didn't like the charts on most of them. They've been really erratic, and a lot of it has been based off of money they're bringing in with some of the supply issues. There's a 60 Minutes segment this weekend talking about the shipping problems, the port problems with the ports, and who's to blame. And the ports are blaming the truckers, and the truckers are blaming the ports, and everyone's blaming each other. I just can't. Well, it doesn't make a lot of sense to me when I look at the fundamental reasons why they should be going higher. Obviously, they've been able to charge more. That's been documented that shipping some of these containers used to be like $2,000 to ship a container, and now it's like $20,000. I mean, they've been able to kind of price gouge a little bit with this whole process. I just don't know how much longer that's going to continue, especially as it's now really becoming mainstream as far as the people knowing about this price gouging that's going on, and with the charts not showing real strong uptrends. I just there just seems to be too much now to where I think that'll start to become alleviated. I think that's probably why the charts have been moving lower on a lot of those companies, because traders don't anticipate that's going to be able to continue. So anyway, I just kind of booted some of the stocks out. I'm not going to focus on them too much here. I'm not going to go through the whole list here. Well, I can go through it kind of quickly here. There's ARC. I mean, a lot of these, there's potential there. They need to start moving back up, though. Here's this nice big V-shaped move, kind of a possible cup with handle type formation. But or the sell signal on this one needs to go back to a buy signal. SD close to breaking out. This is another oil stock, but I'd like to see oil start moving up again. Some of these oil stocks here, CDV, CDR. This is a REIT. Again, kind of wait to see if that breaks out. And again, a lot of this has to do with market conditions too. Does the market start rallying from here? That'll get me a little bit more confident to start buying into some things. AMC has gone back to a buy signal, but again, kind of looking for it to break out. EH has been kind of just flat, moving sideways, hasn't really been going anywhere. REI, this I think will probably boot out. It's dropped. I was looking at this being wave A, wave B, wave C, but now it's getting a little bit too far down. Now I'll keep it in there, see if it can rally up from here, but this is looking more like it's in a downtrend. Riot, I'm not chasing that one. RCMT looks pretty. It's gone back to a buy signal, but again, it's just a matter of not really wanting to add anything right now. There are a couple of stocks we can look at here, new ones we could add under retail. I kind of like this CONN. It's 87 strength rank, so we're dropping down a little bit on the strength rank, but I did like the chart on this one. We're kind of pulled back through here, and then we've kind of been basing. What I'd like to see, though, is a higher low, and then maybe break out to a new high up here. But I can throw this one in the watch list to see if it can move up and break out. Go ahead and add this one in. And then one more under computer and technology. This Ambarella, AMBA, 92 strength rank. Now, it still could be one of those where that's wave A, wave B, and it has wave C. If it can kind of pull back to that breakout area, pull back a little bit further and start to move back up. So I'll throw this in there to watch it. Now, just like the rest of the market, though, it's up today. So it opened down here and it's up. So maybe this isn't going to have a wave C. But there again, if it's acting like the market starts breaking out, maybe this thing just starts taking off from here, and we can maybe jump in it and ride that up if we need to. We can make that decision a little bit later, though. Put the alert on this. That's pretty much it. I mean, I know that, it's been, probably now about a week or so, it was a couple of weeks actually, where I haven't really been real confident. We've been kind of in this market could go either way type of phase. But again, my job is just to interpret what the market is showing me, and sometimes it's not what we want to hear. But if you really analyze things over the last couple of weeks as well, that there's the market has been a little bit back and forth and really hasn't been driving higher. There hasn't been a lot of we can see it in the portfolio performance. We've been just kind of flat in the portfolio as well. So I anticipate that's going to change, and probably change here pretty soon. We are starting to wind down earnings season a little bit. And what happens sometimes is that, earnings tend to drive the market a lot of times, especially the big players like, Apple and Amazon, and you get those earnings reports and they tend to be really moving the market. When you get towards the end of earnings season, what happens is there just tends to be a lack of news that's driving the market. The market will tend to grab onto something and focus on it. I don't know what that is just yet, but typically, and it could be bullish or bearish, whatever it focuses on. But it's hard to anticipate what it's going to focus on to drive it higher or drive it lower. But this is about the time in the earnings cycle that the market starts shifting away from earnings and focusing on something else to make its decision, traders to make their decisions. And so we'll kind of keep an eye on that. The earnings season, if you're not familiar with the earnings cycles, the big earnings months are January, April, July, and October. They typically start a couple weeks into those months. So the next earnings cycle will be January. A couple weeks into January is when you start to get the bank earnings. Bank earnings are usually first. and then it kind of goes from there. Now there's always earnings being reported throughout the year, but that's when the majority of stocks will report their earnings is during those periods. October was the one that we're in right now. It started a couple weeks into October. It'll tend to bleed into the first couple weeks of the next month. So we're now a couple weeks into November. So now we're winding down the current earnings season, and like I said, the next one will pick up into January. So what happens is the focus comes off of earnings, and then, like I said, starts to move towards something else. But I'm looking around, and I don't know what that next focus will be. I usually don't try to predict what it will be. I'll just wait for the market to determine what it's going to be focused on. But that could explain a little bit why we're in this little bit of a lag, and is that the market kind of searching for a reason to go higher. And a lot of the earnings reports weren't great, so that could be another reason why we're kind of lagging a little bit here. But hopefully we get a little bit of clarity by Thursday so that we can get active again and start doing something. But until then, I'm going to go ahead and wrap things up, see what happens over the next couple of days, and see if there's any clarity. Again, keep an eye on, let me go back to keep an eye on the SPY, because, I mean, if it breaks out here, you'll probably see the other indexes break out. Watch for that over the next couple of days to see if it can break out above here, or if it starts to drop. We'll start looking to see if it's kind of a sea leg and see if it drops back a little bit further. Again, personally, I'd like to see it drop a little bit going into next week. We could have a really good week next week if we pull back a little bit right here and then things start turning around. Just the historical bullishness of the week of Thanksgiving, and it's going to be a shorter week. It's going to be a weird week because obviously the market's closed on Thursday. It's open on Friday, but most traders are going to take that whole weekend off. I'm going to take the whole weekend off. I'm not going to be doing anything on Friday, most likely. And so you tend to have a very light volume day on Friday, but the whole week tends to be a little bit bullish. So we'll see how that kind of plays out. Now, having said that, doesn't mean it has to be bullish. We could end up getting stretched this week and then pull back next week. You just never. That's the thing about these historical type or seasonal type moves is they're not guaranteed. And if too many people are assuming that it's going to be bullish, then a lot of times it'll be bearish. So you don't just assume, you don't ever just go buy just because it's a historically bullish time of the year, or bullish period of the year. You have to read the price action of the chart. But again, if the chart looks like it could go up and you're in kind of that historical bullish time of the year, it is a confirming factor that you could add to your checklist, so to speak, as a reason to go ahead and get in. All right, that's all I have. See you on Thursday for the stock specific class. Bye now.